Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for May 20th, 2020. Today we're looking at the USD CHF, the US dollar, versus the Swiss franc for today's trade analysis. Looking here at the daily time frame, for quite a while now, the dollar franc has been in a range-bound market. You can see the black box that I have drawn here on the chart between the area at the top of that black box near the 0.98 level, give or take, at the top of the black box, bottom of that black box, the pink zone, down around 0.96. So it's about a 200 pip range since, let's go ahead and measure back here. We're looking back at the end of March. Beginning of April, we got into this range, and it's been bouncing around in here for what now, about 6-7 weeks, bouncing around in here. Currently more bearish than bullish. We can see today the market falling nicely on the day, pushing back down again from the top of the range and pushing towards the bottom of the range. So that leads us to look for opportunities for selling rallies to resistance or breaking support. That's some interesting opportunities for the dollar franc today. Let's go ahead and zoom it in a little bit here. And one thing that I did is I took Fibonacci retracement measurement from the low down here, bottom of our most recent blue trend line, to the high. That puts the 0.618 Fibonacci retracement level right here at the yellow shade area. You can see that dashed blue line in there. So one of two things we know is always going to happen when it reaches one of these support, resistance, supply, demand, one of these decision zones, the colored shaded areas on my chart, and Fibonacci. It's either going to bounce off it, go back up, or it's going to break through it and continue to go lower. So that's what we're seeing today. We're seeing the attempt of the market to break that level right around 0.966070, that yellow shaded area, the attempt to break underneath it and go lower. And I say attempt because literally the next candle or even the current candle could just suddenly turn back around and turn into a bullish candle. And we've seen that even right here. It didn't quite get under the yellow zone, but it did just suddenly turn back around right there and go back in the other direction. And that's no different than right now. The current candle could suddenly turn back around and go back in the other direction, and you've sold it, and you're kind of wondering what in the world's happening now. So there's going to be some specific things that I look for. One thing that I will often look for is an open and close underneath that zone. That's going to be either on the daily or the 4-hour time frame. We'll talk about a bit more about that in the trade room later on today. But we are underneath the 618. 0.9663. We're under that yellow zone. So we're looking for the breakout and the continuation towards the next area of support, which is the orange zone, 9640.30. And of course, beyond there, we're looking all the way at the bottom of the long-term range at 0.96. We want the clear breakout. We don't want a false breakout. We don't want to fall prey to that challenge test or false breakout. We want the real deal. Let's go ahead and take it on down to the 4-hour time frame. And as we get down here to the 4-hour time frame, again, there's that chat. The last time we challenged here and it turned right back around and went back up. You can see that right there. So what we need to see is something different, something new here. We don't want this to turn into a sudden bullish candle as we decide to take a short. So what I'm looking for, again, is going to be clearly a breakout underneath this yellow shaded area and the 618 fib. That's going to be a bonus there. So you've often heard the term, I'm sure, that you want to buy low or sell high. So it doesn't really make a whole lot of sense to sell it here, does it? We're at the lowest point of the current trend, the lowest point. Buy low, sell high. That doesn't make any sense right now. So how do we trade this? Well, there's a specific setup that we'll look for. First happens to be the open and close underneath. That's going to give me the most, not just the close. I don't want just the current candle to close because we could see the current candle close and next candle turn around and go back up. How do I know that can happen? I'm just going to look right here at this pink zone where the red circle is, and you can see that red candle closed, the blue candle opened, and what happened? It turned right back around and went back up. So we don't want this to happen to us. We don't want to get under the pink zone, sell it, and it turned back around. We don't want to get under the yellow zone, sell it, and it turned back around. So the key player here is that full candle body that opens and closes underneath that yellow zone to increase our confidence that it's going to continue to go down. Often, with a breakout setup, we look for that open and close. We look for the market to rebound, retest under that yellow zone as resistance then before we look for it to go down. So that plays well with our theme there, the buy low, sell high. If you're going to sell something, you want to sell at a higher price. So you wait for the open and close. You wait for the retest at a higher price back towards 96.60. Sell it. The target becomes the orange zone or lower if it continues down through there. Again, we already know that the pink zone sits down here. Your risk and stop loss then comes above the yellow zone. That way, if it breaks back above, you limit the impact to your trading account and you look for a new opportunity.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.